Hello traders, you are welcome to today's session, and today we'll be talking about imbalance, also known as inefficiency, and the SMC traders call it fair value gap. Yes, and at the end of this session, you will understand what is imbalance, what causes imbalance, how to identify imbalance, how to mark up imbalance the right way. What then is imbalance? It means an abnormal movement of price or an inefficient movement of price. You can also say it is an imbalanced movement of price. Yes. For example, let's make example with ourselves. If you have to take a step from point A to point B, you have to take it one step at a time, putting your right leg first with one step and then your left leg forward with another step, which is one step at a time. You don't have to put your right leg two steps forward first before taking your left leg two steps forward. That is what an abnormal movement. So it is with price. I guess you understand now, correct? Then what causes this abnormal movement of price, which is what causes imbalance? Imbalance are mostly caused by the institutional traders or any news that affect a given instrument. How to identify imbalance? First thing you have to know is that three candle makes up a lookout for imbalance. It has to be what? Three candle, not two. Three candles makes up a lookout for imbalance. Just as you can see here. You can see here when price is moving to the upside, you can see how it grip itself. So this is the balanced way or the normal way at which price move. It has to grip itself so as to have a balanced move. You can see how this first candle push up, the second candle push, push up again. Then the third candle came to what? To grip the first candle in order to have a balanced move to the upside. You can see it clearly here at the third candle came downward to grip the first candle and then push to the upside. Same thing with this bearish move. You can see the first candle push down, the second candle push down, then the third candle what? Pull up to grip with the first candle and then continue what? To the downside. You get it now? Yes. Okay, how then can you identify an imbalance candle? You can see the shift from this first candle and the third candle. So this third candle has loose its grips from this first candle. Any area where you spot price lose its grip, which means where the third candle lose its grip from the first candle, that area is known as imbalance. What you have to do is to mark it out. You can see here from which means where uh, the third candle lose its grip from the low of the third candle to the high of the first candle. That area is between the low of the third candle and the candle. That is known as that is called the imbalance. You can see this move here. You can see the third candle came to grip the first one, but it's not the same with this one. So all you have to do is to mark it. Same goes with this second position. Mark it from week to week, not the body, it's what the week to week. So this how to spot what an imbalance candle. Then let's do the same with the bearish move. Or is it that I give you? Okay, let me do this one. Then the next one you have to do example. So this is it. Now imbalance from this bearish move here. This is our imbalance. Okay, yes. Take note of this. The gap between the high of the first candle in a bullish move, the gap between the high of the first candle and the low of the second candle, that is what the imbalance. That is the imbalance. And you can see here why on the bearish move, the gap between the low of the first candle and the high of the third candle, that is what the imbalance. Yeah. And you can see the same thing here. There's also a gap from this. You can see this is the first push and this is the second push. You can see here, so you do that yourself. And you can see another push. This is the first push to the downside, a bearish candle here, and then a bullish candle, a bullish candle. You can see a gap within this range. That's known as what? The imbalance. You may ask, why should we add this imbalance to our entry confluence? Simple. The reason be that price has what move in an abnormal way. Is not like we human when we move in that abnormal way, we tend to continue in our direction. But most of the time, price will come backward to correct its step and then continue to its origin direction. I will show you on the chart. Price will have to come back to this part. Since price has created an abnormal move here, it will have to come back to what? Do something like this. Come back to the to this point and then continue what to the upside. So you do this on yourself. This is what price will do. You understand now? Yes. What then is the imbalance to watch out for? You will always see this randomly on your chart when trading. This one, you always see all this random. So what is the correct imbalance to watch out for? Watch out for the imbalance that is close to either supply zone or demand zone. You can see this imbalance close to this demand zone. So this one, this is where you should watch out for. So this is an imbalance close to demand zone. All you have to do, since you spot imbalance here, what you have to do is wait for price to move into the demand zone, not the imbalance zone. So for accuracy, wait for price to move into this demand zone. So what you have to do is to mark what that demand zone. This is it. Pivot way of marking your demand. I believe you've seen the supply and demand video to use the pivot way, marking down to this low of this one. You can see. So all you have to do is wait for price to what? To push down price to do this, not to get to the imbalance, allow price to what? Go come back to the demand zone and then do something like this and then boom. That's what you should wait for. The same goes with this one. Wait for price to come back to what? The supply zone. Mark it out this way. Yes, you've already identified that there is imbalance here close to the supply zone. Good. What you have to do, wait for price what? To push down to this supply zone and then continue to the downside. You understand? That's these are the what proper imbalance to watch out for. The imbalance close to either supply zone or demand zone. Don't just mark out your imbalance and wait for price to get to imbalance. No. The correct way is wait for price to get to that demand or supply zone that is close to the imbalance area and then watch at price, how price react in those areas and then take your entries from there. You may want to ask again, then why should we wait until price get to that demand or supply zone that is close to the imbalance? Because the big guys who causes this move, they are waiting for price to come back to what? To this discounted level, which is this cheaper price, where price is this cheaper price rate before the what? They place another entry to the upside. So the big guys, the institutional traders are waiting for price to get to what? This premium price level and then they put more entries to push price to the downside. That is just how it works. But most time most time the price will not get to this supply or demand zone. It will just what? End at this what? This imbalance zone and then continue to eat what? Origin direction. That is how it works most of the time. But for me, I prefer to wait for this supply or demand zone. That's a better way to trade this setup. And then now let's move to the chart where I will show you how price reacts in this zone. Now this is the chart from the monthly time frame. It happens on all time frame. I'll still take you down to the lower time frame. From the monthly time frame, you can see spot your demand zone. Let's spot our demand zone first. This is a demand zone, but I won't take this because there's another one. There's a bullish candle here before this drastic move, so I won't take this one. Let's see the one. Okay, you can see there's what? There's an imbalance here from this demand zone to this one, which is from the first candle to the third one. There's an imbalance. Now mark it out. Mark your demand zone. You see what market did here? Market came what to tap on the imbalance zone and then push to the upside. You understand? That's how market does things most of the time. It will just come to tap on the imbalance zone and then push to the upside. Now let's look at the one where price pushed down to the okay. There's an imbalance here. This is it. There's an imbalance between the first candle and what the second candle. You can see our price entered into the demand zone here, into the demand zone here. You can see our price enter into the demand zone and then push to the upside, pull down to what? Because price later creates liquidity here, this and this equal, and the price came down, cleared this liquidity and still what? Continue to what? To the upside. So when you are on this trade, you see price create liquidity. There's a need to up out when price has gotten to this level. You get it. So if you are to take this trade from this point when you see price on this, so let's put out this to this trade from here. Then your stop loss a bit below this. So what price has done? Price has also given you 1 to 2 already. You can see it from here to here is 2.5, 1 to 2.5. So that's a good profit to run away from the market. Now let's look at on supply zone. We've done that of demand. Let's look at on supply zone. Let me take you now to 15 minutes. Now this on 15 minutes. I took this trade yesterday, this trade yesterday. You can see what price did. Price pulled and create what? A supply zone here. So I mark it out. When I saw this, I mark it out. You can see the supply zone. This is it. This is a drastic movement from this one, this bullish candle. The price later retraced back to the zone. So I did not enter from this one. I wait for price to create one, a confirmation bearish candle for me. So when price created this one, this is where I entered. This is where I entered. I entered from this point. Immediately price got to this place. Price created this, so I entered from here. And my stop loss was here. This is where my stop loss. So I hope out here. This is where I close from 1 to 2.8. This one I look at here. When price just did this one, I close out the trade and then price still will continue in my direction. But that's just it. You can see how it works. It works perfectly. All you have to do is to open your chart, spot areas where price create these demand zones close to supply zones, and then see how price react within those zones, just for you to get clear understanding of what you are doing. Yes, I believe you've learned something from this session. Now you know what is imbalance, how to identify imbalance, how to mark up imbalance the right way, and the imbalance to watch out for, the one close to the supply on demand zone, and rather mark up your supply on demand zone as the zone which you want the market to get to and not the imbalance zone. And subscribe, like, comment, and see you on the next one.